my sort of demeanour is more serious as soon as I mention audit, because to me audit is headache, but it needs to be done. Hello everybody, it's me again, Stephen Englander, filming from my studio at my offices in Manchester. Welcome to Between the Spreadsheets. Today I'm going to have a quick look at various different things, one of them being audit. So I'll jump in straight with audit because I don't think a lot of people understand what an audit is. It's something that accountants do at the end of the year to verify figures and make it that your accounts are accurate and honest and legal. My company's going through an audit at the moment, and it's eye-opening and eye-watering. A lot of my last couple of weeks have been spent making sure that the audits run as smoothly as possible. So an audit is about efficiency. Sometimes companies do need an audit to see that the business is running properly. I've discovered cases of monies going out that I never really authorised properly. It's just been a half-hearted, yeah, go on, and then it's gone out and been paid, and maybe we shouldn't have paid it. And then there's also sales that we've made that have come in and we forgot to send invoices out. So all these little things can add to inefficiencies within a business. And even if you don't need to have an audit, it's probably good to have some sort of audit to make sure that the business is running as you want it to run and maximising profit and minimising aggravation. Another aspect of an audit is a sort of protection as well, because when HMRC get involved, whether it's audit on corporation tax, personal profits, or especially VAT, the more we can have outside stamping to prove that you've followed the systems properly and you're above board, the less HMRC will question what you're doing, the more they'll believe that your intention is to do the right thing. So even if there are mistakes or errors, not only will it be picked up in an audit, hopefully, but it will show that your systems are geared up to try and make things right. And at the end of the day, HMRC are not out there to witch hunt anybody or cause anyone undue profits. They just want to make sure that you're running the business as you should be running the business and that the appropriate taxes are being made. And there's nothing like proof of an outside audit that prove that your intentions are good. The main disadvantage is that they can be costly and they can be time consuming. And like I say, until you've got the systems working out properly, they can be aggravating. It's an awful thing, audits, because they really put you on your toes. They question everything that you're doing, and it makes you question yourself, and it makes that mindset change that I need to be more efficient, and it highlights patterns that you didn't realise that were going on, because business does have patterns to it, and the more you follow those patterns, the more you can predict what's going to happen next. The biggest problem with an audit is all the aggravation in forcing you to do things right. But the more things are done right, the less aggravation you have with an audit, and ultimately, if everything's been done properly, then you don't have any problems and the audit just sails through. But a business should be run properly, and an audit will make sure you run that business properly. But the benefits so outweigh the cost and aggravation, it's worth at least discussing what needs to be audited. Now, a lot of accountants should be doing a slight audit every time they do the bookkeeping, and it's so important. I think an audit is stressing just how important bookkeeping is and record keeping is. Not just record keeping on the actual financial records, but there's also legal implications of, for instance, money's paid into the bank from a client or a customer, and you want to know how that came to happen. So how did you get to know the customer? How did that transaction take place? Because sometimes people just say on the phone, right, I've just done this for you, yours a few £100, and the customer just transfers it and you send an invoice out. But it's not good enough. We need some actual trail of how that transaction came to be. And it's all just safeguarding you from HMRC, safeguarding you from criminals, safeguarding you from bad paperwork and underpaying or overpaying taxes. And it's something that don't blank out if I'm talking about audit. Just do consider the merits of it. And like I say, as with everything I ever talk about, you can always contact me and I can explain it further. A lot of you won't be coming across audits because the threshold of turnover or criteria for an audit is quite high. So if you're not turning over millions of pounds and employing loads and loads of staff, then you probably won't need an audit. How long does an audit take? Well, an audit should take 2 to 3 weeks, unless it depends on the size of your company, and it can go on for months. So it depends on the size and complexity of your business, and then how accurate your actual records and systems are. An audit cost can vary. It used to be about 1% of turnover, but now you can run into, for a statutory audit, tens of thousands of pounds. For a non-statutory audit, it's a negotiation with your accountants, and it depends exactly what they want to do, but it's going to be a few £1,000s. Statutory audits, that's on a company that has to have a statutory audit because their turnover or asset base is of that level, have to have this done every year at the end of the accounting period. If you don't have to have an audit, then I would suggest a major audit at the beginning, and then maybe reviewing specific areas that the auditors feel that they want to look at. There's a difference between a statutory one and a one that you've employed to have, because the one that you've employed to have, you don't have to obey any laws, and so the auditors, first of all, they don't have to be registered auditors. They can just be people that are looking for issues and problems within the business to make sure that the business works better. Those are the best audits. Do auditors detect fraud? Absolutely. And although if it's fraud outside the business from people conning you, these are things that by the time auditors spot it, it's probably already happened. What can happen is that an audit can alert areas of danger, areas of weakness where outside fraudsters can possibly get in. One of the ones we spotted is that our cyber security of people hacking into our financial systems and even bank were there, but they weren't strong enough. They've now been tightened up, and I wouldn't say anybody is free of cyber attack, but we're about as protected as we can be. If it's fraud going on from staff, which is a common type of fraud, then that will be spotted, and it doesn't need auditors to spot that. Once the auditors have made sure that the systems are appropriate, the systems itself, the flow of tasks and software and the general way the business runs will highlight any anomalies of anyone trying to cheat you. Then of course the final one is with the owners of the company themselves. So there's got to be a process of the way directors and business owners withdraw their own money. You can't just say, well, I'm going to Blackpool for the weekend, put a load of petrol in the car and go and book in a hotel for a weekend away. There's got to be a process for that, and it's got to be a claimable expense. So the audit will highlight if you're doing things that in a way that shouldn't be done like that. Now, if you are taking more money out of the business than you should be doing, it should be declared through either dividends or a director's loan account or your salary, and an audit can highlight exactly how much you're taking out, but then it will highlight other things like, do you work from home? Because that can be a claimable tax expense as well. Are you using any special equipment of your own to help the business grow? And that could be, have you gone away for the weekend in Blackpool, but you're actually working part-time there as well? So it's getting the records of what you're doing, so you can't be accused of doing anything wrong. Auditors do get audited like any other business, and they've got to answer to the audit commission, so they're under a lot of regulation. And if they're doing a statutory audit, that's an audit that you have to have done rather than one that you want to have done. They're especially monitored to make sure that their reporting is true and fair, and they've got to satisfy themselves that what they're signing off is going to be okay, and there's no comeback to them. And that's why they can be an extra cautious as well, because they've got to answer to a higher body. I want to thank you all for joining me again, and I hope you got something out of it. If you'd like to contact my company or speak to me directly, everything's over here. Thank you very much. Keep well. See you next time.